All right, let's launch. Hey, everybody. It's Will, Mr. Chameleon, and there's Dimitri, my partner.
Hey, everyone.
And, the smartest options man I know. I'm going to share a screen real quick with everyone. Actually, you can just look behind me. You see it, Dimitri?
Yep.
See that? That's the disclaimer. I'll duck down.
Yeah, so everybody, just read really quickly the disclaimer. We're not a investment advisor or broker dealer. We're just sharing ideas. These are not, recommendations to do anything, to buy or sell. All we're doing is sharing ideas here.
I'm back.
Okay.
That is true. Most important, if you do have questions, contact an investment advisor.
Yep, or your broker.
Or a broker, you're correct. With that being said, Dima, a little bit of, I'm going to launch a poll. This poll is going to ask you, do you use the option chain when doing your research? Now, anytime we launch a poll, it's super helpful to us. So please take some time and answer that. Some other ground rules for everyone out there. First, ask all questions in the Q&A at the bottom. We will work hard to get to them at the end. Anything else, Dima, before we get started?
No, I don't have anything else. Let me know when you're ready. I'm going to share my screen.
Yep, you can share your screen and we'll get going.
All right. So thanks everyone for joining. And I know that probably a lot of you have already used the options chain. It might not be that, that interesting to you, but I'm going to try to, maybe show some things you may have not thought about. But when you were thinking about the options chain, and usually, when you're going to the options chain, you're going to see a bunch of bids and offers and quotes for all the different calls and puts in a particular stock. So beyond that, what we did was we created an options chain that after you find a trade idea, really to go and do a deeper analysis or deeper dive into that, into those options that you found maybe in the unusual option volume, big block trades, earnings ideas, wherever it is, you probably go then to that options chain to do a bigger analysis. And what type of analysis? So I wrote a few of them that you could do, and we'll go over. You could do an order flow analysis to see what options we're trading, what other investors are doing. You could look at the time in sales. You could look at the option prices, the volumes, the open interest. We'll go over that a little bit. You could also do a price analysis on the options using the implied volatility. You could use the historical references to see, are the option premiums today, are they expensive? Are they relatively cheap? Are they fairly priced? And what do I think? So we'll go over a little bit of that today as well. Another thing you could do from the options chain is kind of evaluate your risk and reward, right? Like what is my potential? What am I potentially risking to potentially make? And that becomes very important. You could use payout diagrams or other charts, your Greeks, to run that analysis. And finally, we'll try to go over some building strategies. If you create a unique outlook of what you think the stock or the implied volatility is going in by expiration or within that expiration, you could create different strategies and then start to evaluate it from a strategy perspective. So I want to go over those types of things, these types of analysis today from the options chain. So let me just close that. And here's what an options chain looks like. Here's the one in SPY. I'll go to June 5th. So you could see here, over here, you just selected the expiration. Oops. So these are people, I just got a pop-up from the,
sorry about that, the polling.
From the poll. So it looks like 60% use it, 40% don't. And that's good information because we've been doing these webinars, and some of the difficulty I think we're having here is, and we've been asking a lot of people, are you kind of a beginner level, intermediate, or advanced? And we actually have a mix, it's almost like, a third, a third, a third a lot of the times. So I think maybe going out in the future, we might actually just start doing webinars based on, kind of like the level, because when you're doing to the beginner level, the people in the intermediate or the advanced, they get bored. You do to advanced, the people in the beginner level, they get lost really quickly. So I think given that feedback, we might just start doing it based on the level of, where you are with your option knowledge. But having said that, here's the options chain, what it looks like. So we have the calls here on this side, puts on this side, and strikes down here in the middle. And these are just different prices for each of these calls. So that's your June 10th, 310 call. That's the prices here. That's the prices of the put. And that's what you probably usually see for every options chain. That's the least you'd see, right? And then you'll have like the deltas here that we'll talk about a little bit later. But before we start with this options chain, I'm going to show you over here on the overhead. And I think a lot of you who are already like some of this available if you're registered, some you have to be premium, but here you might want to just do a quick analysis of like what's been trading. So here I clicked on the volume, and this is how today's volume in SPY look like by time. So you have it split up by calls and puts, calls in the yellow, puts in the blue. You see the percentage of calls versus puts. You could also just really quickly say where did the trading, what expiration was their concentration. So I just clicked on this expiration. So you could see here, June 1st, most of the trading occurred in that expiration. Then, and then you could compare all the expirations this way. Some people are very visual. Some people like it in tables, but this gives you a quick visual. If you want to see concentration by strike today, so this shows you just which strikes, aggregating all the expirations, which strikes were the busiest. And this gives you a quick visual. Are out of the money calls, at the money calls, or out of the money options, at the money options, were people trading today in SPY. And of course, you could do the same thing if you just wanted to look at any particular expiration. Just click to it. And if you're interested in that expiration, do the same thing. So then you could go here to open interest. This is the same idea, but instead of the volume, you're looking at the open interest. Where is there a lot of interest already, that has accumulated over time? Because open interest is trades that were put on, not yet closed. So where has that risk accumulated? So here, this is really quickly, it just shows you by expiration of view. If you wanted to see by strike, where is there a lot of open interest, which strikes, or if you, for example, have an expiration coming up, let's say June 5th, you wanted to see if there's any one strike that's close to the stock right now, it has a lot of open interest. Maybe people play pin risk, some do the max pain strategy. Then you could kind of evaluate it using these open interest tabs over here. Then moving, stock volatility. And if you guys have questions, put them below. I'll get back to any questions. The stock volatility, of course, when you're trading options, you're trading volatility, right? That's how options are priced. So it's important to kind of know like how has the stock volatility been, right? And this is kind of showing you the 20-day versus 252-day. So where has it been? You could just hover over it, see where the volatility has been, and you could really quickly even compare it to the implied volatility going forward, where the options are forecasting going forward. I'm going to skip a few of these to save time. Sometimes you might want to just see what's the most active option, right? So these are just showing you the most active options. So we see June 1st here, the 306 calls, that's the most active. The next one, June 1st, 304 put. So you could just have it over here, just sorted by most active, number of trades. So this is the volume, total volume at each one. This is the number of trades. So if you see a big volume, not a lot of trades, that means potentially one really big trade happen. If you see a lot of trades, that's split up, right, to make that volume. So maybe a lot of small trades here. And you could see here the price of that option, the open interest, the implied volatility, and so forth. And these are quick reference points. So here I'm on the June 10th options chain, options expiration, and this gives you over here the implied volatility. What did the at the money implied volatility do today in this expiration, and what did it do historically over time. So this gives you an idea in this expiration, what did the at the money implied volatility do. So here we see today it's 2201. That's compared to today's realized volatility of the stock 10.4, the 20-day volatility in the stock 24.1, and the 52-week 24.3. So it's kind of based on the 20-day, 52-day, it looks like it's relatively in line. So that's kind of like what you would start using the overheads to give you quick visual of what's going on in the options, in the order flow, where are the most active stocks, what is the implied volatility doing, what's the historical volatility doing. Now I'm going to go down then to these next level, and then we'll start moving like towards that options chain. And here we have a couple of reference points here, and these are this one, the technical. Let's start from here. This is just saying based on the moving averages, where's the technical? Is it in a bullish trend, bearish trend? And it basically tells you, what directional trend is in. But of course, when you're trading options, not just direction, you're trading movement, you're trading, volatility. So what this is doing is, since I'm on the June 10th expiration with 7 trading days to go, it's going to tell me here in the stock drift, what does the stock usually do over a 7-day stretch? Since these options expire in 7 days, 7 trading days, how has the stock behaved over a 7-day period? So here it tells me 61.5% of the time it's higher. If you take any 7-day period over the last 6 years, it's going to go back and say 61.5% of the time. If you give it 7 days, the stock is higher. The average return is 0.3%. If I hover over that, then it's telling me when it's up, on average, it's up 1.6%. When it's down, on average, it's down 1.9%. Remember, though, it's up more times than down. The best return over that 7-day period is 9.4% in the last 6 years. The worst it's gone down after a 7-day period is 16.6%. So if you held it for 7 days, it's gone down as much as 16.6%. And those are important because when you're looking at the option strikes, right? When you're trying to determine the option strikes, how much can they move, right? If you're just expecting if you think it's very good chance it's going to move up, on average, how much does it move up? And it kind of helps you out with strike selection as well, right? Because the further you go out, right, the less probabilities that it's going to reach that target price. Then here, another thing that traders like is also seasonality. So this was a stock drift over any 7-day period. What did the stock historically do? Traders also like to play seasonalities. There are times of the year where this stock tended to trade, higher or lower. How did it do during a certain period of the year? So today, it's June 1st. This expires on June 10th. So what the seasonality is doing is looking from June 1st to June 10th. During that seasonal period, historically in the last, I think this is looking at last 10 years or 12 years of data, how has SPY performed? So we see here that it's been up more percentage-wise more times than it's been down. 58.3% of the time it's been finished higher. The average return over all those periods has been 0.6%. And again, we could just get a range, right? On average, when it's up, it's 2.1%. On average, when it's down 1.4%. And then you got the best move to the upside and worst move to the downside, 5%, 3.2%. So then what you're doing is you're getting a sense of how this stock has moved during these periods, right? So when you're trying to determine strike prices, how far away they are, these are really quick reference points. Historically, what did the stock tend to do? And then when we get down to these levels here, of course, you could download the options chain, but sometimes you might just want to see something historically. Like, so this is today's options chain. Maybe you want to go back in time and you have an idea like, well, what happened to the options? I'm just going to make something up, like during the dividends, 3 days before the dividend, 1 day after the dividend. You find those dates, and then you could just use this to pull up a historical date like 2019, any month. You pick it, you select it, it'll take you to that options chain. So this way you could view what the prices were. You also get the the volume, the implied volatilities, and then you could kind of compare it and test out your own theories, your own analysis of any type of ideas. Because one of the most important things as options traders, it's not the execution, because too many people, like 95% of the people, they think it's in the execution. I'm going to just look at the prices, and as soon as I'm looking at the price, I'm going to determine what's going on. It's really the planning, it's the research that goes behind it, the methodology, the model, right? So you want to build that up before you enter, because the execution is the easiest part. It's the research you're doing ahead of time. So this is one way you could just go back and kind of look at any type of theories you have. Here, the theoretical values, I'm gonna go over that after we go over this these buttons over here. So these buttons they're just quick references of spots where the stock has been, right? So those might be important to a lot of people, people who play technicals or people who are just playing ranges. For example, where's the one standard deviation predicted move, right? So here, the down one standard deviation, up one standard deviation. So really quickly, you kind of can see if you want to go above it, below it, around it. These are just reference points in the strikes. If you wanted just to find the busiest call option or put option, we'll highlight that. 20-day moving average, 50-day moving average, 252. Those are kind of technical ranges that people reference a lot. So you have that here, 2-week high low, just in the last 2 weeks, how high or low the stock has been. Same thing with 1 month, 52-week high low. So you could reference those as well. Let me see here. And then the average up move or average down move that we talked about over here. Let me just minimize that. This here, the Theo, what it's doing is comparing the market prices. So here I have a market price of this option, 306, 422, 425. But it's just the price. So how do I know in premium terms, is it very expensive? Is it very cheap? I need more information. Otherwise, I could even be right with options. You could even be right in direction, but you could lose money because you have time premium, implied volatility in there. You have a lot of other risks besides your directional risk. And of course, you could create a strategy that's non-directional, like a straddle or butterfly or iron condor. So really, you need a way to quickly reference how expensive or cheap these options were. So the first one here, this is just a best fit line over here. And the best fit is basically running a regression through all these implied volatilities because there's a skew. So you could see here, all these prices, we could convert to implied volatilities and the implied volatilities tell us on a relative basis how expensive or cheap an option is. So this one is 21.8. As you can see, these are going down. So on a relative basis, these are a little bit cheaper than this at the money. The ones going down, these are relatively more expensive, which is typically what you see, right? As stocks increase, what you'll see is implied volatilities are lower because there's more certainty, and they increase in a more organized way, right? When they're decreasing, they'll go down really fast, and that's why you see the implied volatilities on the way down. They're usually higher than the implied volatilities on the way up. But having said that, are these options expensive or not expensive? So here, by running in a regression, we just kind of see, like using a regression, these are a little bit higher, than these. So that's kind of trying to smooth out that skew, smooth out those implied volatility skews, to see kind of like if there's any option in between there that's out of line. The next one, you could just kind of give your own implied volatility, like a custom one, and say, well, I think that the implied volatility should be 20. That's where the stock's going to move. I entered that in, and then it's going to, for the entire options chain, it's going to recalculate, and this is what the options would be worth if it was 20 volatility, right? So this is a straight 20 volatility, and now I could see like, oh, this would be worth 24 cents. It's $1.02, right? So I could give this any one that I want. You could use the last 20 days volatility. You'll just input it for you. So calculate in the last 20 days, what did the stock move? I enter that, and then really quickly I could say, well, if the stock moved at the same volatility did in the last 20 days, these are how the options would be priced. And that's using the binomial. So you could go kind of through this, and really, the idea is 1 year volatility, get a sense of how expensive or how cheap the options are. So you see here, I just put in a 1 year volatility. So on a 1 year volatility, this is how the at the monies would look, out of the money, and then these are how the puts would work. So I'm going to go back to the best fit one. So then we could kind of talk about order flow. So here, when we look at now over here, you could see these are all the expirations. Next to the expirations, I have implied volatility, and then I have the what did the implied volatility do today. So these are in red, these are all down. This one's down 10%, 19%. And this is the volume, the option volume for each of these expirations. So you could see over here 1.1 million just in June 1st that expired today. And a lot of times when you find ideas, like let's say in an unusual option volume, you'll go into the unusual option volume and you'll start looking at, well, find me something unusual. Like I want to see a healthcare stock, low market cap, below 1 billion, maybe where the call volume is above 70%. And like there's a lot of trades. So there's like more than 100 trades, than just trade like one big stock. So see, I just narrowed that down, and then you find it and you're like, okay, here's maybe an interesting one. The stock's up 29%. You kind of like look at the news. And if you want to just see, well, what traded in the stock, right? Like what's going on, that you would go to that options chain and then analyze it further, right? Because then we want to see, well, what options are trading. So really quickly here, I could see that most of the options are on June 19th. This little C is telling me there's also an event coming up June 19th. Then the next one is July 17th. So if I just wanted to see June 19th, right, 21,948 contracts. Here, I'm over here. So I see on which I could see there's more calls being traded than puts. And if I wanted to look at a particular one, like here's a strike, of 8, the stock's 792. Well, what are people doing on this line? So I could just click on that really quickly. It's going to bring up a time in sales for me. And in this time in sales, I could see, this is what the option was yesterday, 25.35. Today it's $1.05. I see the implied volatility change. It says that up here. I could see here what is trading. So I could see a lot of 2 lot, 1 lot, 1 lot, which is telling me it's very small trades, a lot of probably a lot of retail traders just putting orders in. That's what it looks like to me here. These are all regular trades. I could see the total. There's 624 trades 3,232 total options volume, 225,000 in notional value. This was the open interest. This is the volume weighted average price of all the trades. This is the high and the low of the day, $1.15, 15 cents. The last trade was $1.05. And this is the implied volatility ranges that it traded in. Now I could really just quickly make an assessment. Okay, this looks like a lot of retail traders to me. The implied volatility is high. Obviously, they're paying, on average, they paid 70 cents. So do you think that it's going above $8.70 if these are buyers? So that's how, just really quickly, I could go through and see these trades. I could also just sort here, see if there's any really big trades here. And, these are the two biggest trades, 198 contracts, 100 contracts, and so forth, just to look at the biggest trades. I'm not going to go beyond, let's just come back now to that SPY options chain. And I'm going to go over a couple more things, and then I'm going to get to questions. Once you get into, we did the kind of the order flow analysis, and when you look at price, we did a little bit about price, but you'd also want to just kind of click on here, and I'm going to click on this option, say, like, let's say I want to buy potentially this call for 74 cents. So here I could just kind of create myself a diagram, a payout diagram, to see what this looks like at expiration. What am I potentially losing? So if I pay 74 cents, stock goes down, I'm losing 74 cents. It goes up above this point, then I just gain kind of one for one with wherever the stock ends up. And this is also useful if you're doing a strategy. Well, what if I sold this option, and maybe I sold this option, bought this option? What does my payout diagram look like? So it looks something like this, where you could kind of analyze, based on your outlook, what is your potential risk versus your potential reward. And that's what the payout diagram would help you out with at expiration. If you wanted to see before expiration, you could also just say, well, what if, this expiration happens to, only has one day to go. But if we wanted to see before expiration on June 2nd, we could kind of draw that line based on, the next day before expiration. So that's how you could use the payout diagram. This Theo it's a little bit more advanced, but I wanted to get to questions before I go any more into it, because last time we kind of ran out. So I might actually do a part 2 for this, because these Theos, probably on its own, it's a webinar, but this is kind of a quick introduction to how to start using the functionality of the options chain.
Well, the first question about the options chain, D, and before we get started, anyone who's on YouTube, remember to subscribe to us. Very helpful. Go down below, click the subscribe button. Always a big deal for anyone doing anything on YouTube. Dima, the first question from the chameleons on Zoom: if they just land on our homepage, how do they get to the SPY option chain? Can you just walk them through that?
Sure. So if you're in here, I'm just going to go to the homepage and just do it. So if you're on a homepage, you could probably, the easiest way is just type in a symbol here, right? SPY. You go this, you're going to go to like a summary page, and it's right here under options chain. So that's how you could do it from the homepage.
Awesome. The first question on YouTube, we've got a lot of YouTube questions, so it's a little bit harder. We don't have a Q&A there, but I'm going through them. Okay. You're looking at that SPY chain. Machi wants to see, where do I see put selling from the options chain?
Right. So the options chain, it doesn't tell you it tells you the total volume, right? It doesn't tell you, like, because for every seller, there's a buyer, right? So from the options chain, you'll just be able kind of to see here are the puts, here are all the volume in the puts. Here are all the volume and the calls on this side, right? You could use it. You could also just use this volume to see calls versus puts, right? So I'm assuming you're just saying like put transactions.
Yeah, that's what he was looking for. He
Or
also,
put
after that, and I know you went into it, but maybe just walk right through. So from there, he wanted to click to the time and sales.
Right. So on the time and sales, once you're in here and you find a particular option, right, that you want to look at, let's say here the 309 call, the calls on this side, the puts on this side, just click on that volume and it'll bring up the time and sales for that volume. If you're looking for, so this is the time and sales for this June 8th through 09 call, right? These are all the trades for there. Or you could go, if you go to the trades over here, under here, it gives you all the trades. So just a list of trades that you could reference by time or price. So see, these are just all the trades today. So SPY trades a little bit, I think up to 415. So these are just all the trades lined up in no particular, and you could just sort it, if you wanted to see like biggest quantity or by time, you could just sort it over here. And you also have this breakdown, but I'm going to go back to the options chain. So these are the biggest volumes today. Let's just go back to the options chain.
Great. You ready for another question?
Yeah.
Jake is asking, could you show the probability? I mean, I don't know if you hit it quick, or he's asking to see the probability tab.
Is this one? I think we actually removed this. I don't know if this one is actually on.
So that may be what it's Jake. So that's
yeah. You're not seeing it because this one, I think we've removed this probability cone. But it was basically kind of like a visual of sort of like your deltas here. So over here, by the way, you kind of have your deltas, which people use as approximate the probability of that stock reaching that point by expiration. So these are the deltas based on the implied volatilities of the market. And this, by the way, if you wanted to switch to like open interest, gamma, you have all this in here. So let's say you just wanted to see the open interest. So this is the open interest versus the volume today. So remember, open interest gets updated only in the morning based on previous days cleared transactions, but this way you see what was the open interest versus today's trades. If you want to see just, for example, what did the price do today in each option, you could do the market change. So it compares today's midpoint MBBO to the closing price. So this way you could see like, oh, this option is up 50 cents, 46 cents, how much it changed on the day. Same thing with the implied vol for each of these options.
Very cool. The next question, someone's asking, is there a way to find top losers and highest volume in the market? And if so, is there a spot maybe to download it?
Is that top losers in terms of like an option or implied volatility? I mean, I'm not sure. Is that looking at for stock?
It says top stock gainers on high volume.
So I'm top stock, yeah.
But is there
top stock? Yeah. So like top stock gainers on high, like right here under stocks. If you go here, so what this is doing is looking for top gainers, and it's looking for volume, relative volume. It has to have high relative stock volume and option volume. So that's what this is looking. So this is the report over here. It's under the stocks, top gainers and high volume. And it's looking at high volume in both the stock and the options. So it has to meet both conditions.
Sorry, most of the questions today, for whatever reason, YouTube is a big, for a
Sure,
lot of people asking questions, so it's a little bit.
no problem.
Uh,
Okay.
Liberty from YouTube says, "Thank you, Dimitri, for doing these tutorials. They are super helpful," which was kind of
Oh,
cool.
thank you. Yeah, I
Uh,
really appreciate it. And I try to get it, do as much as I can based on the feedback that I'm getting, or just talking to people and figuring out like where they would want to see the most help with.
Can you? Someone's asking about the Greeks and the options chain.
Okay.
Could you just show them how to get to the Greeks and look at?
Yeah. So over here, I'll just go to the next. So over here we have the delta. So it just defaults to the deltas on each side. But if you wanted to like go, switch it to the gamma, vega, theta of the option or rho, you just switch that way. So it's right on under here under the drop down.
Excellent. So I got another question from Zoom. Let me just read it. If one has an option expiring on Friday, can they push their expiration date to the next week? I guess they're asking about a roll. Would be the only way to do it, correct?
Well, yeah. I mean, if the option expires on Friday, those are the terms. You can't change the terms of that option. You could close that option and roll to a different expiration, but you can't change the terms of
Yeah,
an option.
there's no way that I'm aware of to
Yeah,
change the terms of the market. But
yeah,
you could
exactly.
look to
Yeah.
roll that
If
option.
if it expires June 3rd, that option is going to expire June 3rd. You can't change that.
Yeah, you'd have to be involved with the over-the-counter contract, I guess. There was another question from, it was actually relative to the volume list you were showing, the stock gainers with high volume. Someone
Okay.
was asking, is there any way to download that information?
I don't think we have a download button on it, or no, but that list itself is also it's dynamic. It's changing over the course of the day, so you'll start seeing it fill up, right, as it's going. So any new stock that makes the list will pop in there.
Someone is asking about, do you want to go into the block trades at all? Someone's asking about the
Okay,
large trades.
sure. So here, so we'll go to the option block trades over here. Okay.
Yep.
Was there a question with it?
Well, they're asking, I mean, they put, do you know if is there any way to say if it's retail or investment bank and it's just like, et cetera, et cetera. I mean, the only thing we can see is the type of execution it is, right? There's no way to tell who's on the other side of any trade.
Right. So here, these are like kind of the ways that the trades themselves get tagged on the exchange level, and that's the information they put on the tape. So that's what we're rendering, right? So we don't know, the exchanges don't tell you who's on which side of the trade. They're not going to tell you, oh, hey, Warren Buffett bought or whoever. They don't do that. They just tell you, here's a trade. They don't tell you who's on the buy side or sell side. They don't do anything like that. But what people do is we'll start interpolating other things based on the information you get. So, you'll start comparing the price versus what the NBBO, the quote was at the time of the trade, to see which side of the resting orders it traded on, or the market making quotes. They'll look at the notional value, the implied volatility, kind of the delta, the spread. So there's lots of stuff that goes in there that you can start analyzing about the trade. So they do give you a lot of information, but you're not going to know this person bought, this one sold. They're not going to tell you if it was a retail customer or a hedge fund or who it is.
Great. Now, someone's asking about, when you're looking at the options chain, how do you see if earnings is showing up within that month? Can you see it from the options
So
chain?
we'll put like a little indicator here. If we if we have, you know, an estimate of the earnings. So this is SPY, so we just have a dividend coming up. But here, what we could do is just look at, let's see, here's a calendar. So we'll see what it looks like. I'll go to June 3rd, and here's like Campbell soup. So it looks something like this. I'll go to the options chain. So you see here, the earnings, it's just a little indicator that it's going to be covered on this expiration, June 5th. So go on, it'll be, the indicator is on the nearest expiration that covers the earnings. Okay, so that's how that works. So June 5th is the closest expiration that will cover that June 3rd earnings. And these are next estimates with the star.
Very cool. Someone's asking about the movement of the data into the options chain. They mentioned they're aware that all the information is at least 15-minute delays. So how dynamic does the options chain, the data within it, how often does it update? They're asking.
Right. So the market data itself, it's on a 15-minute delay, and then there's a process in it. So once we get the data, we take snapshots. So it will take, and it depends. You know, we run like busier stocks more frequently, like SPY, maybe like on a 5-minute timer or something like that. You know, Apple. So like the top 100, or I forget, maybe more. It's like maybe like top 250 busiest we run on a more frequent basis. Then there are options that don't even trade. Here, I'll show you guys, like, let's go to options volume. So here's like a breakdown of the options volume. So you could see like top 100, they represent 73% of all the options volume that traded. And then you have, like, you know, a bunch of them that had no trades at all. So you could imagine, like, out of 4,000, if 73% of the volumes in the top 100, then, you know, you got like the bottom, whatever, 2,000 probably had no trades. So see here, 425 stocks. Let me see, 673 have no option volume today. You know, so they have 0. So those will get updated less frequently because nothing's going on, and that's just to make, because of the processing.
Very cool. Well, we've come to the end of the answers, Dimitri. I don't know if you want to go back and talk about anything else within the options chain or save that for a later show. It's your call.
Yeah, I mean, if there are no more questions, you know, I kind of wanted to do a quick introduction because I started getting more emails about the options chain. So kind of wanted to go. I think a lot of our users who have been with us for a while kind of already know it, and we've done a lot of videos on it, but it was more of like an introduction into the options chain. And if you start there, you know, and we do have videos, by the way, of all these functionalities here. You know what, we have a little bit more time here. I'll go over this. So let me see what stock are in SPY. So a lot of people, what they'll do is say, well, they'll look at the IV percentile rank, right? So what is this option? Is it expensive or is it cheap? And they'll look at the implied volatility, the relative implied volatility based on historicals. So what we did to make that a little bit easier is just say, well, based on, you know, let me go out a little bit further. Let's say with 9 trading days to go, let's say an option is 1.4% out of the money, right? Above the strike, 9 trading days to go. Instead of looking at the implied volatility, which is like hard to say, well, it's in an 89th percentile, but what does that mean? How much would this option be worth on average? You know, it's 280 now. How much over is it? So what we did was, oops. So clicking too fast. So what we did here was just say, well, this is what it would look like. If we went in history and we took a snapshot of the implied volatility at the end of the day for an option that is the same as this, with 9 trading days left, 1.4% out of the money. These are the implied volatility snapshots day to day. This is the theoretical value, right? 285 on May 29th, 301. So you could kind of see the trend in the last 10 days. You could see, you could see there was a lot of observations here, but we were showing the top 10 out of the 1,105. So you could see in the last 10 days, the range, the trend. This is the average. So on average, this option would be around $1.25. It's been as high as 1862, as low as 6 cents. So we could even sort that. So see, implied volatility was as low as 4.8. That would make this a very cheap option. Implied volatility the other way was as high as 89.4 on March 16th. That would make this option 1862. And this is the average versus today's price. So really quickly, when people look at implied volatility percentiles, you have a percentile, but what does that translate into price, right? So where would the average price be versus today's price, and what is the range? This kind of converts it all for you. So it's much easier, at least, I think to a lot of people, it's much easier this way than kind of visualizing, well, what's 99th percentile? What is 70th percentile? How far away is that price away from the median price? So I think, unless you have any more questions popping in, Will?
I'm ready to get to dinner, my friend. I'm starving.
Okay. Yeah. No, I know.
What's that?
No, and I just had it, we try to be outside this weekend a lot, so I had a lot of sun, and and when you have that, you get tired.
Yeah, no, it was a great show. Listen, on YouTube, they're super happy. I know
Well,
Jake was asking lots of questions. A lot of people out there asking questions. Listen, if you're on YouTube, make sure you register for our channel. Very helpful. Subscribe. Everyone on Zoom, thank you for joining us. Dimitri, as always, what an effort. Big deal.
Thank you, everybody.
People are finding these videos super helpful. And every week, Dimitri puts out at least one video, it seems like, sometimes 2. So again, if you subscribe to the YouTube channel, you're instantly notified when he uploads those videos. So we're going to have a show next week. Deem, are you aware of this?
Yeah, with Jay Soloff.
Yeah.
Yep.
Jay
So we'll have a guest.
Who is a floor trader from the CBOE, and now he lives out in Arizona and trades options and teaches about options, but he's going to be discussing butterflies. So that's going to be next Monday at 6. Everyone will get an email letting you know about that next coming end of the week, or sometime on the weekend. We'll let you know about that. But again, thanks for joining us. Thanks, Dima.
Thanks, everyone. Have a great week.
Have a great trading week, and stay safe, everybody. Bye.
Bye, everyone.